I'm Matt Bichard here at the Hay Adams in Washington, D.C. for NAREIT's 2019 CEO Forum and Advocacy Day. Joining me today is Ann McCulloch, President and CEO of Housing Partnership Equity Trust. Ann, thanks so much for joining us.
Happy to be here.
Now, your company is unique in that it is a social purpose REIT focused on safeguarding affordable housing. Has investor interest in the segment, in your opinion, changed over the years? And how do you go about appealing to and telling your story to new investors?
Investor interest has changed in this segment at both ends, both at the owner-operator level. More apartment owners are interested in this asset class. But we also see many more investors who want to have impact with their investment dollars. And what we tell investors is that you can get a strong risk-adjusted return by investing with us, and you can ensure that your community has housing that serves the full range of working households that you need to keep your community vital.
Now, can you talk about the current level of affordable housing supply and how that is impacting competition for assets?
It's both a good news story and a bad news story. As you know, half of all apartment supply today was built before 1980, and more of that supply is on the affordable end, and that's what we target. That's the good news. The bad news is that this supply, overall, we're losing about 75,000 to 125,000 units a year, more of that among the affordable units. So we are losing supply daily. And the Class B and C asset class really has historically been very fragmented, and it's been held by smaller owner-operators. So it's harder to assemble big portfolios of assets today. But for us, that's a huge competitive advantage because we have partnerships with strong regional nonprofit housing owner-operators who already have deep connections in their communities, which means we can make an opportunistic purchase of an individual asset or a small portfolio where another owner-operator couldn't do the onesie-twosies, couldn't buy the 250 units or the 250 unit properties, because our partners already have deep concentration in the communities we serve.
And lastly, speaking of those deals, are there any ones that the company's done that for you really highlight the success of your mission?
There are a lot of them, but really one of the ones that I love most is a deal we did last year in suburban San Francisco. We all know the San Francisco story. It's impossible to live there. It's crazy expensive. But we were able to buy a small property right on a BART, less than a mile from a BART station just south of Oakland, 105 units. We bought it in partnership with Eden Housing, one of our nonprofit partners. And the property had been last renovated in about 20 years ago with tax credits. So it had long-term use restrictions but didn't have deep federal subsidy attached to it any longer. A perfect property for us because we're comfortable in working within the use restrictions. There's an existing home loan we were able to assume, and we were able to get tax abatements because we're keeping it affordable, and we're working with our nonprofit partner. And we're working with the local housing authority to get tenants with Section 8 vouchers because we're comfortable housing Section 8 tenants and are good at it. So this opportunity to pick up a really valuable resource in the San Francisco community at a good price. We paid about $230,000 a unit. It really represents what we're doing.
And thank you so much for joining us.
Thank you.
For more on this and other REIT news and information, be sure to visit NAREIT's website, REIT.com.